you've heard the same advice 1,000 times. Buy real estate in these hot markets. You know the ones: Austin, Miami, Denver. But what if I told you the so-called experts are leading you straight into a trap? It's a trap of saturated markets, ridiculous competition, and returns so low they can barely keep up with inflation. While everyone else is fighting for scraps in those overpriced cities, the data shows that smart money is quietly pouring into a handful of overlooked cities across America. In this video, I'm going to show you the 3 cities that the data, not the hype, says are prime for investment. We're going to break down the numbers, the economic drivers, and the real indicators that show why savvy investors are making their move here and now. And the number 1 city on this list might just shock you. Now, let's be real. The traditional path to real estate wealth feels kind of broken, doesn't it? You're told to buy in cities with explosive job growth and a flood of new residents. But by the time you hear about it, you're already too late to the party. You're stuck competing with massive hedge funds and all cash buyers. Smart investors don't gamble. They use data to find markets where they can win on day one with cash flow, and then let appreciation act as a powerful bonus to their wealth, not the main driver. The secret isn't to follow the herd. It's to get ahead of it. It's about finding cities with strong foundational economies that are not yet on everyone's radar. Cities where you can buy great properties at a reasonable price, command strong rents, and enjoy the ride as the rest of the world eventually catches on. And today, we're looking at 3 of the best. Coming in at number 3, it's a city that quietly has become the backbone of America's heartland: Kansas City, Missouri. Forget the coastal hype. KC is where strategic investors are finding a rare and perfect balance of affordability, steady growth, and solid cash flow. Let's talk numbers. The Kansas City metro is a hotspot for investors because of its affordability and stable, growing economy. As of late 2025, the median home price sits well below the national average, hovering around the $280,000 mark, which makes it much more accessible of a market to enter. But affordable doesn't mean stagnant. Over the last decade, some neighborhoods have seen explosive double-digit appreciation. And while past performance is never a guarantee, projections show a healthy, sustainable rise in home values. But here's the key for investors. The rental market is robust. The average rent in the metro is around $1,295, and savvy investors can find deals with cash-on-cash returns in the 6 to 7% range. That's real income in your pocket every month. The reason for this is simple: demand. Kansas City is not just a flyover city anymore. It's a destination. The population has been growing steadily, with the metro area now home to over 2.2 million people. So what's the smart money indicator here? It's the massive corporate investment. We're talking about global companies making billion-dollar bets on the city's future. Google and Meta are building over $1.8 billion worth of data centers. Panasonic has its new $4 billion EV battery plant that's creating thousands of high-paying jobs. Pfizer has a massive new office, and the region has become a global leader in animal health and logistics. This isn't just about job quantity. It's about high-quality careers in tech and healthcare that attract a strong tenant base. These companies have done their homework, and they see a future of sustained growth. For an investor, following that kind of institutional conviction is one of the smartest moves you can make. Our number 2 city is a place that has, completely reinvented itself. Once known for steel and industry, it is now a powerhouse of technology, education, and medicine. We're talking about Pittsburgh, Pennsylvania. If Kansas City is about balance, Pittsburgh is about pure, unadulterated cash flow. For investors who put monthly income first, this market is an absolute gem. The numbers in Pittsburgh are, I would say they're almost hard to believe. The median sale price for a home is remarkably low, often sitting in the $215,000 to $250,000 range. This low cost of entry is what makes the cash flow so powerful. While home values are seeing steady growth, up around 6.2% year over year recently, the real story is the rental market. The average rent has been climbing with some reports showing a massive jump of over 30% since 2019. This has created a scenario where investors can find healthy cap rates that can push 7% or even higher on certain multifamily deals, figures that are practically unheard of in today's market. Now, the engine behind this transformation is the eds and meds economy. Pittsburgh is home to world-class institutions like Carnegie Mellon University and the University of Pittsburgh, along with healthcare giants like UPMC. These institutions are rock-solid economic anchors. They employ tens of thousands of people, pump billions into the local economy, and create a constant built-in demand for rental housing from students, researchers, doctors, and the growing tech workforce spinning out of this ecosystem. This creates recession-resistant demand that helps ensure your properties stay filled. So, where is the savvy money flowing? It's not just into single-family homes. It's targeting the neighborhoods surrounding these institutions and snapping up multifamily properties. Investors are buying duplexes and triplexes that provide multiple streams of income from one property. The secret is that while the media focuses on flashy tech hubs, Pittsburgh has quietly become a leader in robotics, AI, and even biotech. The influx of remote workers from pricier cities who want a higher quality of life for less money is only adding fuel to the fire. In Pittsburgh, you're not just hoping for future growth, you're buying into a proven economic engine that generates cash flow from day one. All right, we've covered the balanced powerhouse of Kansas City and the cash flow king of Pittsburgh. I'm curious, based on what you've heard so far, which of these two cities surprises you the most? Drop it in the comment below and let me know, Kansas City or Pittsburgh. Now, the number one city where smart investors are quietly buying real estate, we are looking into a market that combines the affordability of the Midwest with the explosive population growth of the Sun Belt, creating a perfect storm for appreciation that has outperformed most other cities on the radar. That number one underrated real estate market is, of course, Jacksonville, Florida. In many ways, Jacksonville is the last frontier of affordable Florida. Jacksonville has maintained a surprising level of affordability, with a median home price often in the low 300,000s. But don't let that price fool you. This market is on fire. Over the past 5 years, it has delivered stunning price growth. Get this, with some data showing appreciation nearing 70%. So why is this happening? It comes down to three things: population growth, job growth, and quality of life. Jacksonville is one of the fastest growing cities in the country. The city proper is now home to nearly 1 million people, and the metro area has swelled to over 1.7 million. Plus, it has the largest land area of any city in the continental U.S., meaning there's room to grow. This massive influx of people creates relentless demand for housing, both to buy and, of course, to rent. The job market is the engine powering this migration. Jacksonville is a thriving hub for finance, healthcare, and logistics, with major employers like Fidelity and Deutsche Bank, plus multiple large hospital systems. It's also home to 3 major military installations, providing a stable employment base that fuels the rental market. On top of that, job growth is projected to handedly beat the national average over the next decade. And this brings us to the smart money indicator. The secret here isn't just that people are moving to Jacksonville, it's who is moving there. Wealth. Yes, wealth is migrating there. While many high net worth individuals flock to Miami, a growing number of successful professionals are cashing out of overpriced markets and bringing their capital to Jacksonville. They're seeking a better lifestyle with its 22 miles of beaches. That sounds pretty great, huh? And a more relaxed pace of life, all with no state income tax. This influx of wealth is driving demand for higher-end properties and pushing up values across the entire market. For investors, Jacksonville represents a rare opportunity to ride a huge wave of appreciation while still being able to find properties that cash flow. So there you have it. While the masses are getting pushed into bidding wars for low-return properties in saturated markets, smart investors are quietly building wealth in Kansas City, Pittsburgh, and Jacksonville. They are focusing on the fundamentals: strong job markets, affordability, and the perfect balance of cash flow and appreciation. The opportunity isn't in following the headlines. It's in following the data. These 3 cities prove that you don't have to be priced out of the market. You just have to be smarter about where you look. If you want to learn more about how to find and analyze deals in markets just like these, make sure you subscribe to Deep Research Real Estate. Thanks for watching. See you next time.